This is how I would invest if I was 20, 30, 40, or 50. And I want to give you guys a step by step on how I would do it if I was starting back over again in my investing journey. And even though I think I did a pretty good thing when I started investing, when I was in my 20s and I'm now in my 30s. But this is what I would have done different if I knew what I knew now. Like if I was lucky enough to stumble across my page, my YouTube channel, I would watch my first video and then watch my second video and then, continue watching the videos because I'm giving some really good, financial advice in my opinion. But this is what I would do if I was 20. If I was 20 years old, right? I would try to invest as much money as I can into the Qs. And like I said, go watch my first video so you can understand what the Qs are and what the power of compounding with the Qs does. Even if I was starting off at, for example, let's say I started on my journey 10 years ago. If I was starting my journey 10 years ago and I only had $1,000 to my name and I was able to put at least $200 a month, the Qs gave us a return in the last 10 years of 20%. I would be sitting at $82,000 right now just because of the power of compounding with the Qs. And we're not going to assume that the Qs is going to continue to give us these type of returns. Let's say the Qs give us, for example, 12%. Let's just say our base case scenario, because I like to invest and I like to plan for three, scenarios. I always have my bull case, my base case, and I have my bearish case. So, of course, my bull case will be, okay, we're going to continue growing at 20%. But my base case, I really think we're going to get down anywhere from 12 to 15%. And I want to be conservative with my projection. So I'm going to say 12%. If I started right now with $1,000 and I did a monthly contribution of $200 and I invest that money into the Qs for the next 10 years, I would be at almost $50,000, right? The debate and the argument will be if what is $50,000 10 years from now? That's, a conversation, a YouTube video for another time. But wouldn't it be nice if somebody could, have $50,000 for you when you get to the age of 30 after 10 years of investing? Okay. So if I was 30, I would do the same thing. I would invest in the Qs. I would aggressively be investing in the Qs aggressively. I would, try my best to live under my means so I can invest all my extra capital into the Qs because I know the power of compounding. If I was in my 40s, I would pretty much maybe not invest as aggressively into the Qs because of the volatility. But it just all depends on how comfortable I am with the volatility, but I think I'm still going to be investing in the Qs pretty heavily. And I would do some more of the SPY and maybe throw a little bit into the Dow because the SPY is a little bit less volatile than the Qs, and the Dow is a lot more, a lot more, sorry, less more volatile than the SPY. So, but of course, when you play around with those the volatility like that, you're going to diminish your returns. So I would continue to invest in the Qs. If I was in my 40s, yes, at that point, I'm going to invest a little bit more, into the SPY, into the Dow. And I would really have the majority of my money into the Dow because the Dow being less volatile than the SPY. And I would invest like that. If I was in my 50s, I would definitely stick to the Dow because I'm close to retirement age and I'm not looking for that volatility anymore. Another thing too, a bonus thing for you guys is if you have any children, start investing into the SPY and the Qs for them. Like start investing, like let's say for example, you have $1,000. If you could put in, you know, let's say 15 years from now, you could be potentially giving your child $100,000, and that's a blessing, And like I said, the debate is gonna be what is $100,000, 15 years from now, but still $100,000 given to your child just by just investing and using the power of compound and we could even drop this down to a more lesser rate and say okay 88%, then I would say that's like my bear case because I still think we're going to grow. But if we drop down to 8% and you do those contributions, look at that, you're starting with $1,000. The next 15 years you're at $72,000. um Extremely impressive. It's something we definitely could do. um So, like I always say, start investing, start putting something away, you know, get to the point that this is just second nature. To me, I try to put as much money as I can. When I tell you I put as much money as I can, I pretend to be broke so I could put more money into the stock market because I know how to grow my money. I know how to find great companies. I've been doing it for over 10 years and I'm looking to continue to do it. So thank you guys for coming. Like and subscribe. If you have any questions, leave it in the comment section. Catch you guys on the next one.